Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's figure out what's happening. We have a big day tomorrow, so there's a lot to go over. So let's just get right into it. If you enjoyed, don't forget to hit that like button. This is not financial advice and I am not a financial advisor. And of course, my membership section is live on YouTube. The link is down below if you're interested, for $2 a month, where I share my intraday thoughts on Tesla as it's moving and give you guys updates pretty much as it's happening. Link is below, but let's just jump right into it. Tesla closing the day actually ever so slightly in the green. Hopefully you can't hear that siren out there, but ever so slightly in the green, up about almost 0.4% on the day, which is going to be putting us at about almost $255 per share on the day as well, just shy of it. Now, there's a few important things to go over. So, similar candle as to what we had yesterday, just a little bit larger, right? But this is a pretty important situation that we find ourselves in, because I personally view us as being in a little bit of a limbo here, if that makes sense. So first and foremost, on the daily, right? Once again, we are sitting right in the middle between the 21 EMA as a resistance, which is sitting around 256 roughly, almost 256. And then of course, right under that, we have the 100-day moving average around 252 and the 50-day moving average right around $250, which we did go below all of them again, like yesterday in the morning, this time even lower, but we bounced, right? And we talked about this blue line the other day. Actually, I think literally just yesterday or the day before. I think it was yesterday. Yeah, it had to have been yesterday. Anyway, we talked about how this blue line is a very valid perspective because, right, we had these lows over here, we bounced off over here, and then we pretty much came down to it almost exactly to the T, right back to the line. And that's exactly what I was sharing with my members right over here as well, right? So that's going to be important to understand. The fact that we did bounce off of that is a good sign. The fact that we recaptured the 50 and the 100-day moving average is a good sign. But there is still some things to be cautious about, mainly of course being the 21 EMA being the first and foremost, but also of course we have the volume profile over here being obviously a rejection or a resistance point now, where you can see the massive volume, right? It acted as a support over here many times as we kind of kept falling into it and kept bouncing above it. Now we're kind of doing the opposite. You know, we're falling below it and we keep going back up into it, but we keep getting a bit of a projection. We did close pretty much right dead smack in the middle of it, so it's a little bit of a limbo. This is why I say it's a little bit of a limbo land, where we're kind of like right in the middle here, like which way we're gonna go, right? But you know, it's something to be really careful about. Now, the easiest way to look at this, to not make it too overly confusing, and to give you a bit of a better perspective as to what to expect and maybe when to turn bullish, when to turn bearish, is as follows. So first and foremost, from here, if I had to pick a direction, I am slightly more bullish than bearish. If I had to pick a direction here, I am slightly more bullish. But with that being said, if we break below this blue line, which at the moment, if we happen, let's say, to do tomorrow or Thursday, will be somewhere around 247, 246, 247, something like that. That's strike number one. Not ideal, but not the worst just yet. Ideally, we do hold above that. That's strike number one. I turn slightly more bearish. Strike number two, and probably the biggest one of them all, is falling pretty much below $240, like the very low 240. It's like 240 to 242 essentially. That is where we fall out of this wedge, or this rather a large channel that we are in, ascending channel, and that's not only strike number two, but a very large strike number two, like probably like the nail in the coffin almost, especially if we start closing candles below 240. That's where I'm going to be really nervous as a bull. I'm not going to be happy about that. I have cash. I'm ready to buy the dip, right? I did trade. I did buy the dip this morning. I'm still holding half of the shares I bought this morning. I did sell the other half, but that's where I'm going to be really nervous essentially as a bull. But I have cash ready just in case, but I think that's going to be painful ahead. Now, with that being said, let's talk about the upside. If we can break above the 21 EMA, so essentially 256 at least, like minimum 256, and start closing candles above that, that's strike number one for the bulls. That's a good sign. That's what they want. That's what the bulls want to see, and it's really bad for the bears. On the flip side, the strike number two, that's like a lot more of a confident kind of, situation, if you will, kind of similar to the red line just flipped, is going to be breaking above this blue line all the way up here. This is where I'll be a little bit, or not a little bit, but a fair amount more bullish and confident in that bullish kind of thesis, if you will, where essentially if we can break above 265, ideally 270, that to me will be phenomenal. I would love to see that, and that to me will be pretty bullish, and I'll be very happy to see that. So those are the main levels to pay attention to. Once one of those levels get broken, as usual, we've seen it many times. I've shown you guys it many times, over and over. But once one of these major levels, especially the strike two levels that I talked about, get broken, that's where not only is a direction most likely, not of course guaranteed, nothing in the market's guaranteed, but that's usually when a direction will get not only chosen, but you'll probably see some decent momentum to that, respective direction as well moving forward. So just keep that in mind. Those are the most important things I'll be personally eyeballing right here for tomorrow's earnings. Now, as usual with earnings, right, things can always get completely thrown out the window. It's a major catalyst. This earnings is still a little bit of a question mark up in the air, you know, in terms of margins. That's probably the biggest one with all the price cuts happening, right? How is Tesla doing in terms of margins? How is the financials really looking for the business, right? At least for the short term with these high interest rates, like how is that looking? Also keep in mind, Zach Kirkhorn is no longer going to be there. He's no longer the CFO, or at least maybe he's temporarily still a CFO, or maybe they're still doing that transition, I believe, I think till the end of the year. But the point is he's not going to be on the earnings call. So that's going to be interesting to see too, right? Elon might be a little bit more loose, right? Zach Kirkhorn won't be there to kind of, you know, round things up a little bit and talk the way Wall Street wants to hear things, right? So just that's important to understand. Usually Elon doesn't say things Wall Street wants to hear. He just says whatever the hell he wants to. I like it personally, and I think it's very interesting to listen to. And I personally get very bullish with what he says, but Wall Street doesn't like the way he talks. They don't like the way he just overall quote unquote promises things, if you will. So just keep that in mind. Elon might be a little bit more of a loose cannon tomorrow, but without someone really kind of holding him back at least a little bit. So usually when the reason I bring that up is usually when that happens, Elon's comments and the way he talks, usually, not always, but usually, yeah, because Wall Street doesn't like it, that usually means a sell-off. So just keep that in mind. Just take that for what it's worth. But the way I look at it is this: if we sell off into earnings, let's say tomorrow, I'm bullish. I'll probably be starting to slowly nibble on the dip. If we sell off post earnings, like after market / Thursday, as long as we maintain 240, I will personally be most likely buying the dip. Obviously, I'm still going to leave cash just in case we fall even lower, but I will start nibbling on that dip as well. That's just the way I'm looking at it, and that's just my personal opinion. Now, moving forward, let's bring out the squeeze meter. So this is an interesting one here. Right, we talked about this many times, how, you know, we are showcasing a potential squeeze coming up here for Tesla, which most likely at this rate seems like it'll happen post earnings, or like during earnings / post earnings, right? We are currently on the 5th red circle, if I can count correctly, which I thankfully can. 5th red circle. Now, the interesting to note here is this. You can see, if you look really closely, this might be a little bit difficult to see. You have to look really closely. But on this current red circle right here on today, the 5th red circle, you can see an ever so slight uptick of that blue line. It's unfortunately very small, and it's not the most confident looking uptick in the entire world, but it is showing a blue little bar above the red circle. That's a good start for the bulls. That's what the bulls want to see. They just want to see a little bit of a more confident blue line. Like if we can see a bigger one tomorrow, for instance, like, you know, throughout the day before earnings itself actually happens, you know, after the market closes, it's not bad. That's what the bulls want to see. It's a good start. On the flip side, if we start seeing it to go back down to this kind of like, you know, orangey one that's pointing downwards, essentially, not so good of a start for the bulls. Pretty good start for the bears. So we'll be paying attention to this very closely. I'll make the video a little bit earlier tomorrow, probably around 3:30 Eastern, because I want to be ready for earnings when it comes out, right on 4 o'clock, then 5:30 the actual call itself. So I'll be making it a little bit early, so we'll take another look at it and see how it's looking tomorrow. But of course, as usual, I'll keep my members updated with that as it's happening. The weekly, on the other hand, still showing a 3rd red circle, right? Nothing's changed, but it's not really showing a direction there just yet. So ideally, we'll see a little bit of a blue uptick here in the weekly as well, but we'll see. The fact that we're not seeing there anything yet is a little bit, not really concerning, but it's a little bit, it's giving me a little bit of anxiety. Let's just say that, right? So we'll see. But that's kind of the main thing I'm looking at right now. The final thing we'll talk about before I end off this video, without overcomplicating it with too many, BS things, because those things I talked about, in my opinion, are the most important things to look at, is of course options, right? Let's take a look at options, just to show my members this, but there is a bit of bearishness coming in here on the bottom left, you can see, right? This morning, when I showed it here, it looked a little bit bullish, if muted, but it looked a little bit more bullish than bearish, right? You can see definitely more green circles than red circles, but I just posted this as well right before I started recording. Looking more bearish. And not only that, but we have a solid 1.2 million in premium. Fairly sizable, not completely out of the world crazy, but it's definitely not something you want to ignore. 266.7 puts expiring the 19th of January of 2024. So essentially in about 3 months or so. Actually closer, like take 3 to 4 months roughly, give or take. November, December, yeah, 3 months. I'm sorry, math is hard sometimes. They're about 3 months from here. So, a little bit of a, concerning put there, right? Take that for what it's worth. It's just ever so slightly, it's a pretty large put. So just take that for what it's worth. Could be a hedge, obviously, to shares. Who knows for sure what it actually means, right? But it is a bearish position. So just take that for what it is worth, because that isn't, it's 1.2 million in premium. That's not little. So that being said, thank you so much for watching. If you enjoyed the video, don't forget to hit that like button. But if you're curious, the RSI is looking neutral. The MACD's kind of looking slightly bearish, but nothing crazy. Really overall kind of neutral, right? The weekly, same kind of concept, right? Slightly looking bearish. Honestly, it's looking like it wants to go bearish here a little bit, but still nothing too crazy, nothing too obvious just yet. But that's all I got for you, ladies and gentlemen, today. We'll see you tomorrow. Tomorrow's a big day. Hope all of you are ready to go because I think it'll be a pretty deciding day as well. But with all that being said and done, thanks for watching, and I'll see you tomorrow. Peace.